Good morning and welcome to Talking Bull. Only me today. Joe and Jamie are off to sunny London. They're going to the commodity show, so hopefully I'll be able to entertain you and take you through the morning news headlines, and then we'll take a look at the technicals, which is obviously one of my favourite things. So it's the Tuesday, the 26th of April. Can't believe we're nearly done with April. The time is 8:46 and we'll dive straight in to the news headlines. So let's see how good I am at handling all the technical stuff on my own. So we'll take a look now. A global risk appetite attempts to recover. Risk appetite remained very vulnerable in European trading on Monday, and further concerns over the outlook for the global economy and the impact of more aggressive central bank action to combat inflation. Chinese coronavirus developments also increased further, with mass testing in Beijing to contain the latest outbreak. There was, however, a tentative initial recovery after China cut reserve ratio requirements, and a recovery on Wall Street also helped stabilize wider risk conditions later in the day. Turnaround Tuesday is a very well-known phrase back from the day. Stronger than expected German data. German IFO business confidence index recovered to 91.8 for April from 90.8 and the previous month, and well above consensus forecast of 89. Ukraine fears continue. Markets remained uneasy over developments in Ukraine, especially with more hawkish rhetoric from US and Russian officials after the US Defense Secretary warned that if Russia wanted the Russian military capability to be reduced. Russian Foreign Minister Lavrov also warned over the risk of escalation and the use of nuclear weapons. Markets overall were even more concerned over the threat of an extended conflict. UK data remains disappointing, and we've also got hawkish Bank of Canada rhetoric. Bank of Canada Governor McClem testified to Parliament on Monday. McClem reiterated that inflation was too high and the bank will act forcibly, especially with the evidence of excess demand in the economy. Japan denies joint intervention talk. Japan Finance Minister Suzuki stated that there was no truth to reports of a joint US-Japan discussion on intervention, which curbed the potential for further yen buying. We'll have a look at that in the technicals. Risk appetite also recovered, which curbed yen buying. Also, there was still a lack of conviction over yen selling. So does all that make sense? Maybe, maybe not. Let's take a look at the charts. I'll make myself a little bit smaller in here. First of all, we'll look at Eurodollar. Eurodollar, we haven't seen these lows for a year. If we look over here, the 52-week range, we're on the low, breaking lower this morning, and we'll take a look at, I mean, technically, bearish, bearish, bearish. Nothing else to say about a euro dollar. The dollar drives higher against all currencies, and there's no sign of it turning around. The shooting star back from the 21st has led, that's last Thursday, has led to further downside, and we're breaking down even further. 106.84. Let's take a look at the weekly chart to try and get some idea of where we could find support. And really, if we really want to look back, we have to look back all the way to the 23rd of March last year, where we made a low at 106.36. So within spitting distance of that, will we get a turnaround Tuesday in the dollar? Doesn't look like it. On the sterling side of things, again, well, I mean, you can see how well sterling has performed over the actual euro, with last March lows in sterling were down here 114.18, and we're holding up up around the 127.19. Coming into, we should get a little bit of support coming in around about the 126.85 level in sterling dollar. One to watch out for. Dollar index really sort of trying to force its way back up to the 103 level. That was the last March's high in the dollar complex. Obviously, that is mainly euro dollar. About 60% of that weighting of that basket is euro dollar. nothing slowing it down, nothing stopping it. That is going to continue, and it should really target, nothing really saying it won't target that 103 level. We can see that where we're trading now, the 101.92, around 102, was quite interesting back in March last year. That was the close of the week of the 16th of March and the open of the week of the 23rd of March. And we saw a big reversal. So may not be turnaround Tuesday, but maybe there may be something somewhere that we can sort of like really hold on to see that dollar turn around. Dollar yen, obviously looking at that, we can see that stalled ever so slightly. It got up to just below the 130 level, 129.41, and we've seen a little bit of a recovery to the downside. So a little bit yen buying. We could look at the daily chart even and see that over the last week we've been really sort of like sideways price action on there. Let's take a look at cryptocurrencies. Cryptocurrencies, always a really interesting one. Let's take a look at my one. I know where they are. And Bitcoin has recovered ever so slightly. We've got we had a bearish end to last week, and this week has started off a little bit more positive. We've got this bullish outside candle, which is formed after the doji on the 24th, and further upside seen this morning. So nice little recovery from there. On a weekly chart, it still looks negative for me. We've made a new low on the week, so that's negative. Really need to capture ground above 43,000 before we fend off the negativity. Don't know whether we've got enough momentum in this small turnaround for that, but we will have a look and see how that progresses during the week. Ethereum hanging around the $3,000, for me that's quite a psychological, quite pivotal area. So let's take a look at commodities. Don't let us down, gold. What are you doing? Gold continues to move lower, and it's really heading towards it's almost flirted with the 1890 support level. Now this is quite interesting. Obviously we've seen gold performing pretty well along with a lot of precious metals and commodities over the last few months. Obviously dollar strength doesn't really help gold, so as dollar goes stronger, gold would naturally move lower, and we're starting to see that a little bit now. So maybe more of a technical move or a value move rather than anything else, and we're seeing it test around the 1890 level. We're seeing a turnover on the MACD crossover, so we could expect a break of 1890 in gold. Could be quite significant. Maybe I'll look at that for the gun to head challenge. I know last week I sold silver. Last week's candle on silver was a bearish outside candle. It's bearish outside candle on gold the week before. Sorry, that was last week. This week we've extended that move quite aggressively lower, so that definitely may be one to look at for my gun to head trade idea today, which I'm going to be doing on my own, but never mind. So taking a look at indices, and we can see the recovery in Dow Jones. It doesn't look like a big recovery, but on the daily chart you can see a nice bullish hammer type candle where the low we got down to 33,315, and we've sort of we've turned around. We're 600 points higher than that. A nice turnaround for that. Saw the same thing on the European side of things. DAX made a nice recovery. I was short of that for the gun to head yesterday, so that didn't do as well as I was hoping. Not really sure when the recovery was. I might have got away with it. No, maybe stopped last night on the close, or very close to anyway. But we'll take a look at that in a little bit more detail on the 4-hour chart also. So this is DAX, and we can see we've got this downward trending resistance. Really sort of think this can continue lower. We've got this head and shoulders formation forming, and we haven't quite broken the neckline yet. Flirted with the lows yesterday and recovered quite nicely. So maybe a little bit more to play out, may have to wait a little bit longer to take advantage of this. Well, I mean, the 4-hour candle, if you look at it, is looking a little bit bearish. So is that something to be aware of even this morning on the gold side of things? So what other markets do we want to look at? Let's take a look. I'll take a look at Nasdaq, obviously the tech sector. We've got earnings out, obviously, that's going to be impacting on the indices. The overriding issues are the concerns of inflation, the concerns over the UK and Russia situation and that escalating. And we seem to have stalled ever so slightly over the last few hours. Now, this 4-hour candle in Nasdaq doesn't play out and doesn't finish till 10 o'clock UK time, so we've got an hour left to play on that. But it looks like a nice little turn that we're seeing in the markets as we come into this European Open session. So Joe will be back tomorrow. He'll fill us in on the detail of how we performed yesterday on the gun to head challenge, and I will dive straight in to today's. I'm really tempted to sell these stocks again, so let's go for it. Looking at the technically, we had a nice turnaround yesterday, but we're failing on the 4-hour chart. This is a really short-term trade idea. That's what we've got to consider. I'm going to sell Nasdaq. We're going to sell it at market. This is trading at 13,452. The stop could be, well, let's bring the stop in. Stop is at 13,602.4. I'd like to get these nice and round, and we'll look for a 3-to-1 risk reward on this. So market looking to break down and go head towards these lows we saw in the middle of March. So that's my trade idea, getting short there. Stop at 13,602.4. Target is 13,002.4. And let me just take a little snip of that so we can make a record and enjoy the result of that later on. Later on today, or later on tomorrow when the team are back. Right, so what have we got to look ahead for today? We've got 3 o'clock, we've got US consumer confidence figures. We've got overnight, we've got the Australia consumer prices also. Key events over the next week, April to 28th, Bank of Japan policy decision. And remember, they're talking about intervention. And April the 28th, we've got US GDP. So that's it. Nice, short, sharp and sweet today. Thanks for joining us. Hope you've enjoyed it. Hope it's added some value to your trading day. And look forward to catching up again tomorrow when the team are back in town. Thanks very much.